Good afternoon, everyone. Hey guys, this is Bruce Marshall with Simpler Trading, doing the nightly video update, market update for Wednesday, June the 29th. We're almost through the quarter, and it's been a crazy week trying to trade this mess. It's been a crazy week, or a crazy year, of course, as we know. This week's been a little extra crazy, or frustrating, I guess I should say. And we'll get into that in a minute. But I want to look at the market and look at kind of what's coming on the horizon and where we might go. And the best way to do that, in my opinion, is to look at the ES, which is the ES/SPX. The ES is just the futures version, so we'll look at that. That gives us a tone of the overall market. So this is today, and if you're day trading this stuff, I think, I'm actually not really, I've been trading for 34 years now. I'm not really a day trader, but that's really all I've been doing this year is day trading and weekly trading. And, for the next 2 weeks or so, normally my time frames are 30, 45, 60 days out. And I'm doing a lot more kind of buy and hold or set it and forget it kind of trades that last for 30, 45 days, that kind of thing. But lately, this market, as we've talked about many times this year already in these videos, if you've seen my videos, I've been saying, we're not in that kind of market right now, and I don't know where we're going to be in the next hour or two, much less 30, 60 days out. So you've got to shorten your time frames down and trade this market pretty actively. So today, if you see here, lots of swings, back, forth, back, forth, back, forth, back and forth. The gist of what I've been trying to do is sell call credit spreads on the upside and put credit spreads on the downside. And that will work in a good way, but you have to have done it before, because they can go against you very quickly if you get one of these big gaps either way. So be careful, don't just throw one out there and go play golf or something, because you can get smoked on it very quickly. But with proper trade management, some really tight stops, things like that, when it hits your stop, get out. Just don't even mess around with it. Just get out, as fast as you can. I did that twice today, and I got stopped out the first time for a $300 loss, and I got stopped out the second time for a $300 profit. And so, net zero, which I'm fine with that. I tried twice, and at the end of the day, of those trades at least, didn't lose any money. So you got to manage this stuff really closely. But if we look a little deeper, you see this white line right here? That is a Voodoo Snow Line. And we have been hugging this snow line here. The light gray is the overnight session. The black is today's session, right? And let me show you, let me go back to yesterday here. And you can see that we had a big free fall yesterday, 120 points straight down. And then guess what? We came to our Voodoo Snow Line, which is basically an Elliott wave level. David Starr builds these voodoo lines for us, and they're based on Elliott wave. And check this out. It's like a snake wrapped around this level. It's just, we're hugging this level. And even all day today, we came down, but we came right back up. Came up, came back down. And we're just hugging this snow line here. These are very important levels. And what this implies is that we will probably, today's Wednesday, we'll probably continue to hold this. I don't know. We'll see. Overnight, next day or two, maybe for a couple days. But what this implies is that we are probably going to break out one way or the other, up or down. My gut feel is down, but we'll see. But let me show you this. So let's back out on a 20-day chart here. And the red line up here is our Voodoo Fire line right here. And that's the heaviest line. And notice the same thing here. You kind of consolidate and you're hugging the line, just like I was showing you on the other one. And then what happens? You break. And we came all the way down to our Voodoo tree line down here. And then we start up ripping higher, ripping higher, ripping higher, ripping higher. And then we start consolidating. You see that? We just consolidate for a couple of days, couple days. And then boom, we slam down right into this line. So what will happen, obviously, from here, I think we either bounce higher, maybe if we can clear that line, maybe we come up here at that point I would short it hand over fist to come back down, or we just come straight down back down into this level here. So it's not looking good if you're long, right? And you can see it's very clear right here. This is it's a classic downward trend here. Lower lows, lower highs. It's going down. We're going lower. Now we might, break a little bit higher and then come back down, that kind of thing. And at some point, when we get data that says we're turning and inflation's coming down and the war in Ukraine's over and all that kind of good stuff, we'll turn back up. And then we'll go higher highs, higher lows, just the opposite. And then we'll do this stuff that we did over here. But that's not right now. So don't play it that way because you get burned. It will turn at some point. But again, I don't think that's anytime soon. So what am I looking for? Right now, we've got, let's see, tomorrow we got PMI. Friday, construction spending, ISM manufacturing, those aren't too big. Don't forget we got a holiday on Monday, 4th of July, of course. Next week we'll have job openings, ADP employment numbers on Thursday, and then the big one will be payrolls on Friday. But then we get into, let me pull my little calendar up here. The next week, we get, I believe it's 13th, 14th, we have consumer price index and then producer price index, which will be the huge gauge of inflation. And then guess what? We've got a Fed meeting down here on the 27th. And guess what? On the 20th, we kick off earnings season. So a whole lot going on in late July. So there's a good chance we could turn, let's say that earnings in general, Amazon, Google, all the big ones, Tesla, Netflix, etc. They're all great and they're crushing it and earnings are better than ever before and everything's great. Yeah, we start moving our way back up here. Apple, so forth. Is that going to happen? Yeah, I kind of doubt it. But we could. So, the point is you've got to be prepared to switch sides at any point in time, bullish or bearish. And then manage it. This has been a great market. We've been making money. I've been making money in the bias room for myself. We're up 22-23% year to date on the overall portfolio, which is pretty good in this market. But we're trading it. We're being very careful, sizing very small, tight stops. All that kind of stuff. And it's a little more work than normal. Normally it's not that. It's kind of, we do a lot more set it and forget it and that kind of stuff. This is a little more work, a little more challenging, but it's working, and again, the key, we all want to make more money, right? So be careful and use, smaller size, tight stops, be careful on your entries. I'm trading a lot less number of trades than I normally do. Normally at any one time I'd have 5, 6, 7 trades on at once. I've got like 1 or 2, maybe 3 trades on at once because you can't manage all this stuff. It gets crazy. So anyway, if you're not in the bias room or you're not in the main room at Simpler, come hang out with us for a little while. We do this in real time with real money and, and post all the trades and all that kind of stuff. So join me in the main room or join me in my room. My personal room is called Bias, and we do this every day, all day long. So anyway, hope that helps. Again, be careful. Watch what's coming up on your economic calendar over the next couple of weeks, and we will, I'll get back together. We'll get back together at the next update next Wednesday. So thanks for the time, and I'll talk to you guys soon. Take care.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me